Leading global specialist risk consultancy Control Risk and NKC African Economists, the Africa-focused subsidiary of Oxford Economists, has launched the fifth edition of the Africa Risk Reward Index. The Africa Risk Reward Index plots each country's performance relative to its African peers by comparing some of the continent's largest and emerging markets, offering investors a comparative snapshot of market opportunities and risk across Africa. A partner West Africa generalist at Control Risk, Tim Cox, joins us now to tell us more about this year's index. Good afternoon, Mr. Cox. Thank you for joining us on the program. Now, tell us about the Africa Risk Reward Index and what it seeks to achieve.
Well, thank you very much and good afternoon. Great to be here. So we're very excited about this, which is our fifth edition of the Africa Risk Reward Index. And what this does is it takes a number of political and economic factors. We weight 11 key metrics, and together with our partners at NKC African Economics, we assign these scores based upon our understanding of the operating environments and based upon the econometric data that we analyze. And what this gives us is a snapshot for investors who can then make better informed decisions about where their particular risk appetite sits based upon the relative reward or the relative risk upon investing in any given economy.
Now, this is the fifth edition of the publication and the first since the advent of COVID-19. What are the key findings as it concerns Africa?
Yes, indeed. And of course, this year's edition is dominated by COVID-19 and the impact that it has had on economies across the continent. I think the first thing to say is that the highlight of this year's report is really a low light in that the reward rating for all of the economies that we include within this index fell, some of them quite significantly. And that is mainly a result of the impact of COVID-19 across both the formal and informal sectors of these economies. So a significant impact. It also reverses a 4-year trend, which we have seen previously, which has been a steady increase in the aggregate reward ratings for the economies that we looked at.
Oh,
the risk ratings,
Go ahead, Mr. Cox, you were saying something?
Yeah, so the risk rating is slightly more nuanced and complicated with some fallers and some gainers. But by and large, COVID has been the key narrative and the ability for the economies to bounce back and reverse that record flight of capital away from emerging markets that we've witnessed over the last year is what we're really focusing on going forwards.
All right, now we'd like to know, where are countries such as Nigeria and Ghana in all of these?
Well, both Nigeria and Ghana are hugely important economies, not just within West Africa, but on a continental scale. They are both modest fallers, so the reward index has dropped slightly and the risk has increased slightly. And that leaves them both relatively equally matched in terms of an aggregate reward score, but certainly Nigeria is further towards the riskier end of the spectrum in that regard. But it's worth noting that our aim here isn't to create a league table or indeed to be comparative in a negative sense. What we're looking to do here is identify those countries and those economies which match differing investors' risk appetites. Some of that Nigeria, even though it's a bit higher risk than Ghana, according to our scales, offers tremendous reward opportunities based upon its demographics, based upon its economic diversity. And so that's where we're pitching this at. For one investor, that might be the right market. For another, Ghana may be preferable.
Now, no one saw COVID-19 coming, but then what recommendation does this proffer to African governments towards tackling the effects of the COVID-19 pandemic?
Well, as we've said, I mean, COVID-19 dominates this year's report, and it is a hugely important issue. I think there are three things that African governments can look at doing as they transition out of this pandemic phase into the recovery phase. The first is to be very clear and transparent about the communications and invest in getting the right data and getting that data out to the various stakeholders that need to hear it. Too often we see obfuscation or we see attempts to bury unwelcome headlines. And ultimately all that does is generate further uncertainty, which we know is a major spook to investors. So while we certainly cannot downplay the importance of this crisis, it has been hugely significant, both on an economic and on a personal level. It is very important to look to the future and to recognize that this will change. Which brings me to the second point, which is where African governments can help their economies to restart. And we've seen a big focus on tech, particularly tech and digitalization of the older sectors of the economy, things like agriculture and extractives, helping to solve problems and bring new innovations and new solutions to long-standing issues that those sectors have faced. And finally, there is an opportunity in the adversity to capitalize upon a greater than usual public tolerance for implementing some reforms that might not be terribly popular. We're seeing this in Nigeria at the moment with the downstream energy sector and also mooted reforms around aviation and telecoms. Really important that this opportunity, this very narrow window of opportunity, is used to help push through some of those reforms, narrow the fiscal base, and leave those governments better placed to capitalize upon the resurgence as and when it comes.
We would like to thank you, partner West Africa generalist at Control Risk, Mr. Tim Cox, for speaking with us this afternoon.
Thank you very much.